Let's take a look at some charts on ETH Classic, the latest article for Brave New Coin. So ETH Classic, or ETC, was born out of the DAO debacle a few years ago. Basically, a bunch of people sent money to a DAO, or a decentralized autonomous organization, and the DAO fund got hacked. So ETH decided to, well, a few people at ETH decided to fork off and kind of bail out ETH. Some people thought that wasn't a great idea, and so we had ETC. It was quickly listed on exchanges, supported by Barry Silbert, and here we are. Overall, ETC hasn't gained anything against ETH on any metric that I can see. The only metric that it has a chance in the near term this year is probably hash rate, if the proof of stake stuff for ETH continues to ramp up, if mining profitability for ETH continues to increase. The ETH miners either shut off their miner or they move to ETC, which is probably a more attractive option than doing nothing. Other than that, ETH will probably still remain a very powerful juggernaut against ETC on any metric that you can look at. Looking at the inflation rates, so ETC is green, ETH is purple. You can see that ETC has a bit of a different type of inflation schedule. They actually have a block reward reduction set for later this week. Every 5,000 blocks, they have a 20% block reward reduction. So this inflation rate will come down this week, which is good if you're an ETC holder. But even still, it's probably not going to come close to what ETH has right now as far as their inflation per annum. So like I said earlier, Barry Silbert sort of championed ETC. He's the head of DCG, Grayscale, a bunch of other crypto companies, conglomerate, and opened first the Bitcoin Trust, which is accessible through normal legacy trading structures, audited, that sort of thing. Then they opened the ETC Trust not too long ago. So they currently have around 8% of the total circulating supply locked up in the trust. Certainly has its pluses and minuses as far as the power of locking up that much supply and having sort of say over the network from a centralized perspective over at Grayscale. They also do good stuff like support devs, that sort of thing. So it's not all bad. Again, looking at hash rate for ETH, you can see it spiked and then dropped almost as equally when mining profitability made sense. To me, this says more than anything that ETH miners don't care. No miner does. I don't, when I mined altcoins, did I care what I was mining? No. All I care about is profitability. So if ETH mining becomes unprofitable, they're going to switch to ETH Classic. And this says that, to me, that miners are capable and ready to just switch over in an instant, in a heartbeat. So it wouldn't surprise me one day when ETH Classic hash rate surpasses ETH hash rate. Again, especially because ETH wants to change the algorithm to ProgPow. They want to kick off miners using proof of stake. One thing that would be problematic for ETH Classic from a hash rate perspective is if ETH Classic also adjusts their hash rate, which has been discussed. Not really in the forefront, but ETH Classic was 51% attacked January 2019, and after that, an improvement proposal was brought up to change the algorithm. So if you're an ETH miner and they change the algorithm on ETH and ETH Classic, you kind of know where to go at that point. If we take a look at transactions per day, the green line here and the fill is average transaction values. You can see ETC hasn't surpassed the all-time highs in January 28 and a little bit after February 2018, January 2018, when the transactions per day hit an all-time high, average transaction values hit an all-time high. The price also hit an all-time high. So since then, it's just been ranging. The transactions haven't really been in a trend or a pattern or anything like that. It's just sort of up or down. Average transaction values did spike with price a few months ago, mid-February, something like that. But overall, there's no bullish or bearish anything here. It's just ranging. I mean, what you want to see is a month over month increase in transactions, increase in average transaction values, that sort of thing. And you're not seeing any of that here, just seeing spikes, troughs, peaks. It's all over the place. Looking at NVT, which is an inverse metric of economic utility, the line here in the fill is active addresses. Start with active addresses. You can see it's been up, rising, since 2017, certainly making higher highs. This is a 30-day average. So overall, seeing active addresses rise, certainly bullish. Definitely had its peaks and troughs, so it's not exactly completely organic. I mean, it's probably happening as some sort of stress test or spam attack or mixer. There's something going on here that I couldn't exactly figure out. Because if you go on like transaction or active addresses per day, then it's sort of all over the place in the millions versus in the thousands. So I don't really know what's going on there. NVT has come down pretty sharply over the past couple months, over the past month and a half from all-time highs. That's what you want to see if you're bullish. You want to see increased utility for the market cap. And it's not truly bullish until it's sub 40. So you're looking at a ways to go yet for NVT. Looking at some technicals, checking out the Bitfinex long-short ratio, RSI, which is a momentum indicator, VPVR, just the volume profile of the visible range, and the 50 and the 200 EMA. Nothing super stark or troubling sticks out to me. I mean, Bitfinex long-short ratio is probably the most even out of a lot of the alts traded on Bitfinex. You can see longs haven't made higher highs basically since 2018. Shorts have sort of ranged up and down, certainly on the higher end of percentages recently. VPVR, so price hit sort of this high resistance zone on the recent highs, and now it's going to probably come back to around $5, $6, something like that. You're going to see the 50 and the 200 death cross. It's just golden crossed. So as a whole, every market is just all over the place right now from a trend perspective. My concern is that it sort of is inching back into this bearish pitchfork. And you can say, well, it's been invalidated because it went way above the pitchfork. Sure, but if it starts to behave like it's stuck back in the pitchfork, if it ranges in this zone, if it retests the median line like it did 5 or 6 times in 2019, then to me, it's back in the bearish pitchfork, which gives a projection of lower lows, month over month until it's back above once again. This $10 range, USD wise, didn't really hold as support. I mean, it was resistance, and then it just kind of died off from there. No bull divs yet. Well, maybe a small bull div here on RSI as you're getting lower lows in price. So bearish momentum is waning, but support does not sit until $4, $5, $6, something like that. So it's got a little ways down to go probably. And trend is definitely leaning bearish. You can see we're below the cloud now. We're below the 200. That just says it's better to look for shorts over longs. It's better to wait if you're looking to buy strength. Definitely no strength on this chart. And then lastly, ETC, BTC, also below the cloud, probably below the 200 at this point. My guess is it'll retest this 7,000 sat level. It had this nice Adam Eve, broke out. It's probably going to come all the way back to that support resist area. No frank bullish or bearish divergences here just yet. And you can see that the VPVR level didn't hold as support, much like that $10 level. The 10,000, 11,000 sat zone was just kind of came and went. No real staying power for price as far as that's concerned. So going